All right, guys, welcome back. This is Trade with Ola, and we're going to get the second video for draw on liquidity. All right, so while I am currently making this video, I'm currently uploading a previous video which was talking about entries. And in that previous video, you're going to see where I did an analysis on BTC USD for a buy and why I made further statements by explaining the draw on liquidity concept I had on BTC for that short buy, which was like the internal range move. And I'm going to show you guys few hours later how that trade played out. Okay, a few hours later how that trade played out. But while doing that, I'm also going to explain draw on liquidity. And from there, I believe we'll be able to understand the whole concept about draw on liquidity. And then you're going to see that, oh, I gave an analysis on a live sample in my previous video. And few hours making this video, we have what? The trade fully played out. All right, so let's just go straight to it. Now, when we're talking about draw on liquidity, we are literally just talking about where liquidity itself is resting. Now, I don't want anybody to get confused here. My other previous videos, I've always made it clear to every one of us that we have the draw on liquidity concept. When we talk about liquidity itself, we cannot basically see it, but we just give it that name because it's what has been there. We met it there. I met it there as a forex trader. Do you understand? I wasn't the one who created the concept of liquidity, but I had to understand the concept of liquidity based off our retail trading space. Do you understand? So now we're going to just immediately go straight to the point. When we talk about draw on liquidity, we're just talking about points or areas where we have what resting liquidity. And the chart itself or price itself has a unique way at which it distributes or moves around its liquidity or moves from one resting liquidity to another resting liquidity. And price requires liquidity, which is formerly known as money, to make it move. So basically, we want to see or understand how the draw on liquidity concept helps us understand or also helps us build or guide us in our directional bias movement. Because the truth is this: yes, we know that, okay, we want to know when we are buying, we want to know when we are selling, right? But the truth is, when we get our trend and when we get our directional bias, price will not just move in that one direction once. Price is not just going to do this and keep on buying, buying, buying. No, you're not going to see a straight, beautiful line like this. No, instead, you're going to see that rough pattern, which I've always drawn for every one of us to see, where we have something like this being produced for us. Every structure like this will be produced multiple times, which is not a straight line. Okay, so price is doing its thing this way, but still making that what up move to the upside. Okay, so price doing this is still making its uptrend to the making that uptrend. At the end of the day, price has moved to the upside by just creating a structure like this. But you can see that it did not move on a straight line, which is very, very important for you guys to understand. It did not just move smoothly. No, there were certain points of draw on liquidity concept that were what implemented, and price has to take out those liquidity resting in key areas and then before moving in line in that same way, moving in its intended direction. Okay, so what I'm just trying to say is price will always take one point of liquidity from another point of liquidity. Do you understand? And still moving in its direction. So it's now left for you to understand when price is doing certain things, maybe moving from one range or coming back from another range to take out another range. Okay, so that's why we have external range liquidity and we have internal range liquidity. Okay, so basically, you've basically seen me using our liquidity concept or drawn liquidity concept when I'm trading to know when I should stop buying, when I should start buying, or when I should stop selling, or when I should start selling. Okay, so I always know my targets. There's always a target. You just notice that, oh, Ola, you're still buying to this point. Why? And when you buy to this point, you stop. Why do you do those things? They are there for certain reasons. They are there to guide me because I told you guys that entirely price does not move in a straight line. It will take one draw on liquidity and then move to the next draw on liquidity. So you have to be very careful because you probably might have gotten a setup close to where the draw on liquidity is about to end, and then you think it will just continue moving in that direction forever. No, it understands you are correct on your direction, but price can easily come back, stop you out, go to the intended draw on liquidity area where liquidity itself is resting, take that liquidity out, and then move back in your direction. Okay, and then you say, oh, market, your village people. No, it's just you being at the wrong place. uh, should I say at the wrong place in the right time, right? Something, I don't think so, but like you basically at the wrong position, but in the right direction. And I think that's way better. Okay, so let's just go straight to it. All right, so when we look at this, we have two major external range and internal range liquidity I always work with. Now, my external range liquidity are highs, previous highs, and previous lows. You can see them, I mark them with these dotted lines. These are my liquidity points. Previous highs and previous what lows. You can see the example here. I have the previous high and then this previous low. Okay, so this is for a bullish move example. You can see that I marked out this to be my external range liquidity, and this is for a bearish move example where I have these lows. All these lows here are external range liquidity. Now, when we talk about internal range liquidity, as simple as that, you don't need to think too much about this. Now, internal range liquidity, we're talking about internal structure, point of interest, order block, breaker block. Do you understand? A-shape key level, V-shape key level, all these zones are marking internally. Okay, so before price was able to move from this point here, down to this external range liquidity. Obviously, there was what? An A-shaped key level, an apex level there, where price got to take out that liquidity and then drop back down, taking out this external range liquidity. So this move here, price went for what's the internal range liquidity and then came back towards the external range liquidity. Okay. So what do I mean by that? So let's say we have an example of an uptrend. Price will always make what? We say price makes higher highs, higher lows, higher highs, higher lows, higher highs. This is our simple layman example of when you want to understand an uptrend, right? Now, what do you notice here? You notice that price creating higher highs and higher lows is creating what? A break of structure. Price is creating break of structures for you. But why do you think price takes out this external range liquidity, or this creates this break of structure, and one way or the other pulls back into this aggressive move that has been created? Why? Because whenever price takes out this high, this is an extra that liquidity resting here. There are sell orders resting here. People are selling that. It was sellers that created this move to the downside. So there are still enough sellers here that price needs to what? Take them out before moving back to where we have what? Enough buyers. Okay. So they are resting liquidity at the top here, and there are also internal resting liquidity at this point here. That's why you see that price gets to somewhere here and then buys back to take out what? Those people that sold from this point here. So we have resting liquidity here. We have internal resting liquidity also here. Okay, that's why you see us saying external range liquidity, internal range liquidity, external range liquidity, internal range liquidity. The same thing goes for the downtrend where we have lower lows, right? Lower highs, lower lows, lower highs, lower lows, right? So we still have what? We still have what? External range liquidity down here. Okay. So the highs and lows, external range liquidity down here. Mind you, these are also external range liquidity. This high, this high, this high. Yeah, they're also external range liquidity. Then we have internal range liquidity like point of interest, like order block, breaker blocks, A-shaped key levels, V-shaped key levels, whatever key levels you want to call them. Do you understand? Whatever key levels you want to call them. Sorry. So we have those key levels resting here. Okay. So you now see price going back to those levels. Okay, before you see price pull back. See price going back to those levels before price comes back for what? The external range liquidity. Okay. So that's how to understand your concept. Now you must always note something. There's always a circle. Okay, there's always a circle when it comes to what? Draw on liquidity. What is this circle? Price will always move from what? If price is in an uptrend, price will always move from an internal range to an external range liquidity, back to an internal range, then back to what? An external range liquidity to the upside. Okay, mind you, I put that last word, to the upside. Okay, now when we talk about the downtrend, we see price moving from internal range liquidity to external range liquidity, internal range liquidity to external range liquidity to the downside. Exactly, simple as that. You understand? So you always see that circle. That circle must always happen where you see price move from what? Internal to internal to external, right? And here also price moves internal, external to what's the downside. So the only difference between these two moves is that one is moving to the upside and one is moving to the downside. At the end of the day, this one has an intended direction to take itself to the upside. This also has an intended direction to take itself to the downside. Okay. So now let's see live examples based off the previous video I gave to every one of us. So if you look at this on BTC USD, when I did my last analysis for entries, guys, let me show you guys the trade. Actually just hit TP now. All right, so I give an explanation here, and some people be like, oh, Ola, why are you buying here? How do you know when to buy here? I've not really explained much on roadblocks. Okay, so when I saw this roadblock, I saw that price, this was 4 hour rejecting 4 hours, and then price would give us what, a market structure shift, which was a proper breakout. And then I knew at this point here there was a breaker block here. You can see if you scale to the 30 minutes. I first saw this breaker block here. This was a breaker block here. I could have easily taken from this entry here, right? Good. So, but after that, I saw another breaker block on the 15 minutes. Remember, if you're watching this video I'm uploading right now, you understand why I picked the entry, why the entry was picked from here. I didn't take this trade, mind you, because currently this is weekend and I don't trade during the weekend. And I don't also have I don't use XNES. If not, I could have taken this trade, but I'm not interested in using XNES. I have other brokers I work with. All right. So basically, we have this here, and then price what came to this one here. Why did I pick this one, or why was this one chosen? That was because, remember, if you're watching my current video, which I just uploaded, you see that I told you guys we have first break of structure, second break of structure, the third break of structure, which are multiple break of structures, right? Let me explain that again, because this is very crucial, very important. We have this break of structure here, this one here. Okay, this was a break of structure. We also have this here to be a break of structure. We also have here to be a break of structure. So we had about 3 break of structures, which confirms this structure to be a very strong one. But which one happened first? Yes, you can say all these ones are valid, are internal, but these ones are this is the closest structure to the inducement. Okay, so I had first break of structure, another break of, this was the aggressive break. Okay, this one count took out this point, and this point. But all these ones here, you see that this one only took out one structure, one structure. These are not valid break of structure. But this one took out what? Multiple structures. This is a valid break of structure. So this aggressive candle took out what? This structure, and this structure. So which structure do you focus on when you want to take your entry? Okay, so a lot of people will come, like when I saw it on 30 minutes, I picked this one. And if I had picked this one way or the other, if my stop loss would have been around this low on the 30 minutes time frame. Let's see. Okay, my stop loss could have been maybe this breaker block here, and price will move in my direction a little bit and then stop me out. And I'll say, oh, what did I do wrong? Market is just doing its thing. No, that was because there was a proper break of structure before this one. The first break of structure was actually here that happened in the 15 minutes time frame. That's why you see me, I always work with the 30 minutes and 15 minutes time frame. Okay, so the proper break of structure you see here right now is from the 15 minutes time frame. The first, that when I mean proper, I mean the first break of structure. This was my first break of structure, followed by this one, followed by this. So I'm focusing on the first break of structure. So which was this, and that's why I picked from this breaker block. And you can see price came here. This breaker block, I said breaker block, this other block, and this other block is also what? An A-shaped key level. Okay, so this is an A-shaped key level. If I wanted to have like a crazy sniper, I'm supposed to have taken it from this V-shaped key level here. And that's how you see this crazy sniper here. Can you see that? Stop loss below here. So V-shaped key levels, A-shaped key levels are very strong levels you can work with. So it is in line with my order block. Remember, SLP concept says, oh, take it from this order block here. Yes, we know that, but I can refine using a precise level using maliciousness and our concept and mark out what? Either this V-shaped key level or this A-shaped key level, anyone you want to use. This A-shaped key level now has turned into what? This was supposed to be what? A resistance that now turned support. Okay? So this can be your RBS, but I prefer using A-shaped key levels, V-shaped key levels, QM. In my videos, you watch them carefully, you see them. Breaker block levels, I'm not always, I have to properly refine them to get sniper entries like this. Okay, so that's how this trade was analyzed. You see my last video, I called out this buy. I said, okay, there was going to be a buy opportunity here. Why? Because of my draw on liquidity concept. So let's now go back to why I saw this buy. Now, how was I able to see this buy? Basically, my 4 hours, I know that right now on BTC USD, we are in a what? Bearish trend. Price has confirmed a breakout, and price has been creating what? Lower lows, lower highs, lower lows, lower highs. But what you notice, you can see that whenever price takes out external range liquidity, price pulls back into what? Internal range. Price comes back down again to take out what? This external range liquidity. You can see that price has taken out this external range liquidity. So where is the next drawn liquidity, my brother? My brother, the next draw on liquidity is what? Our what? Internal range. So price is coming back to this internal range liquidity here. And that's why I am looking for more buys, counter trade buys. So my draw on liquidity even gives me proper precision on my directional bias, because you can see that our directional bias can be a bearish move, yes, but do you see price moving in a straight line? No, price is moving from one range of liquidity to another range of liquidity. So you can see this place here, price took out this external range liquidity here, pulled back. You would have been looking for buy opportunities, because you know that they're coming back towards the internal range liquidity. Then immediately after that, you wait for a reversal concept and take back in line with the overall trend and take out this external range again. Price got to this roadblock, pulled back in again. That's why you see me taking buys into this internal range, and then what, take out what, external range liquidity. What do I have here again? I have the same thing. Price is now pulling back in. So today, Monday, which is in few hours time, I'll be looking for more buys. I'll be looking for more buys to take out what? To take out this what? External to take out what? This internal range liquidity. It can be, we have one point of interest here which I'm still looking at, but I've not marked it here because I feel like it's not going to hold. Price might come back to this extreme one here, and I'll give you my reasons later on in other videos, because I don't want to start giving you guys some certain things that I'm not supposed to at this point in time. But what do you see? Price took out what? The external range and start pulling back internally. That's why you see I took this buy. But that's why you see I did my analysis on this buy. Okay. So if you were to use your Malaysian SNR concept, you can see that this trade would have easily given somebody on a Sunday evening a 1:21 risk to reward ratio. Is that not crazy? Yeah, it's crazy, but it works very well. Okay, it works very well. You just have to relax yourself, understand your structure properly. So I know that, oh, I'm looking for more buys. High chance I'm looking for more buys to get to this point here. We have one here, but this one here has been mitigated. This level here has been mitigated. So I'm looking to take more buys to this level here. So on Monday, I can be looking for more buys to get to this point here. Okay. So that's why I took this. So if you look at this, if I'm to draw the schematics out, you can see that price is making what? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and the price is going back here. And now if you bring out the schematics so that you see what I'm talking about, you can see price at the end of the day is still making that bearish move to the downside, but not in a straight line. It's not doing it in a straight line. And that's why you see that every external what? High and low are what? External range liquidity, and then external range liquidity. And then you can see all these points here, internal, other blocks, all these other blocks you'll be seeing here, breaker blocks you'll be seeing there are your what? Internal range liquidity. Okay, so that's how I'm able to get my draw on liquidity concept. I hope that's clear for every one of us to understand. So let me show you guys briefly. So this is the video currently still uploading, but let me show you guys so that you see that I actually did the analysis, and I would show you guys. It was just like I was just talking and I was just saying it. Okay, so this was it here. There you go. So one, this was here, here, and then finally to this point here, and then you can see that I've not even updated my record, my trading record. So it just hit TP just now. So there you go. So it's very important for us to understand the draw on liquidity concept. Very, very important. Okay. So that's it, guys. Thank you guys so much. See you guys in the next video.